What is going on YouTube, and we are back with another one. Alright guys, so in this drop I'm coming at you with a play that will double, but before I get this show on the road, if you're looking to change your future financially using the stock market, do consider joining the movement by hitting that subscribe button. And if you're already locked into the channel and you know someone who could do with making money in the stock market, whether that's a family or friend, do bless them by putting them on the channel. Now, before we kick things off, I want to let you guys know down in the comment section, we have the scammers at full force. They have leveled up now. They're talking about crypto schemes, giving out WhatsApp numbers, having in-depth conversations, impersonating myself. I want to let you guys know that's not me. I don't do those kind of things. You guys know what to do, just report and ignore them. Now, as I mentioned earlier, it's been a great day for our growth plays. So those of you who have been sticking to the strategy, your portfolios would have seen a nice jump up today. If not, you guys have been deviating from the course. And this is just a taster of what is to come. Now, those of you who have fears of stock market crashes, I want to put a couple of things on your radar. Now, what you guys must realize is we are going into a phase of economic reopening. Businesses opening their doors, starting to operate at full steam. This is going to be increased revenues for these businesses, and that is going to transfer into the stock market with higher prices. Also, despite what you hear on the media, you guys know I'm here to cut through the noise. Households are sitting on more cash. This is because there was less spending on travel and entertainment. That money is also going to find its way into the stock market, resulting in higher prices, resulting into higher portfolio values. So I want you guys to keep your energy, keep positive, stick to the strategy, because we are going to come out winning. Now, as I mentioned, I want to put a play on your radar that will double up. But before I get to that, I'm going to cover off one of our portfolio plays. Up on screen, you've got Lovesac, ticker symbol LOV. You guys will recognize this one from a couple of months back. This is a modular sofa retailer that's very popular with millennials. Now, there's something we need to do with this play. They've come out with a business update, told us that they're going to release their financial results in a couple of weeks' time. However, since we invested into this play, we've received no PR, no business update to tell us how it's going. So we need to protect the downside in case they do not live up to expectations when they release their financials. I expect them to perform strongly, but in any case, it doesn't cost us anything to set our stop limits on this play. So I'm gonna run you through how we do that. First up, let me show you, we're still holding the 35 shares in this one, return over 15%, average entry $53. So we hit sell, head over to stop limit on this one. Limit price, need you guys to select $51, stop price $52. That way, if there's any downwards volatility, we can cash out, move to the next one. Right now, guys, we have no room in the portfolio for plays that do not live up to estimates. So if they don't pass the test of earnings, we can cash out, take that money and invest in another high growth play. So now we're onto the play that will double up. That's Hire Car, ticker symbol HYRE, currently standing at $10.81. This is a play we picked up a couple of months back. This is a peer-to-peer car sharing marketplace. Now, with this play, you guys got to recognize, because we're going into economic reopening, there's going to be a lot more activity and a lot more demands for their car sharing platform. Not only that, we know they're in hyper growth mode. They're getting thousands of new cars onto the platform. This is going to drive up their revenues. So this is a play I wanted to put on your radar. This is one that might have slipped off your radar given the volatility of this play. But you guys need to ignore that short-term price movement. This one might drop 10% in a day, rise 10% in a day, but overall, if you give this one some time, they will double up. You guys got to recognize some plays are more volatile than other plays. Just because you've seen that play dip down temporarily doesn't mean it's a bad play. It just means, given the dynamics of the business, given the dynamics of that stock price, it just moves and swings more wildly than other more stable, non-volatile plays. But we can still capitalize on this one by thinking ahead. And one thing I want to highlight to you guys is they passed the earnings test. Revenues came in strong, about a 50% uplift on the last year, and I expect very good numbers for their next financials, which will drive up this stock price even further. So I don't want you guys to sleep on this play. Remember, this is a volatile play, so whatever you're investing into this one, be comfortable seeing that one swing around in the short term. Now, in terms of time frame, this is not a play I'm putting on your radar to double up in tomorrow's trading session or next month's or even the next 3 months. This is a play you guys want to get cheaply and hold. Let management do what management need to do to take this one to success. This is a solid business, good fundamentals, so I'm putting them back on your radar. Now, entry on this play is key. I don't want anybody buying this one above $10. We are waiting for a call off in that stock price below $9. This is a volatile play. It will dip into the buy zone. We load up under 9, and I want you guys to give this one until this time next year for them to hit $18. All right, guys, Barocco in the channel, you know what time it is. This question comes from Esther and says, do we ever sell at a loss from one play to pivot to a stock on the up and up? So this is a great question. So as I say, you can use this current market condition to pivot out of some of those weaker plays into more quality plays that are down temporarily, but they will be making their climb. Think of plays like a Tesla, like a charge point that have already started to move. As I say, all plays run their own race, and we've got a lot of other plays in the growth portfolio that are in their consolidation pattern resting at the moment, and they will be making their climb. It's just a matter of time. So I want to let you guys know this opportunity to do so will not last forever, so you guys need to react quickly. Now, it all starts with identifying what plays you want to pivot out of, and you guys need to take into consideration if you're going to take a loss on these plays. Firstly, what catalysts they've got coming up to push that stock price up, their valuation, are they overvalued, undervalued, and how much of a loss you're at. We do not want to be incurring big losses. So you can take a small loss, a minor loss, that's fine. Remember, you can write that off on your taxes. Now do remember, when these growth plays rebound, they rebound strong. Like we've seen a charge point move up like 40% in a week. So this is a good strategy that you guys need to continually review with your portfolios. And in doing so, you're actually creating a much better, a much stronger portfolio by having more quality plays and getting rid of those dead weights in the portfolio. All right, guys, that wraps things up. Do help out the channel by hitting the like, and if you're new, join the movement by hitting that subscribe button. Now, as we progress for the rest of the week, you guys know the deal. I am packing the heat to ensure we continue dominating. So I'll catch you in the next one.